Everyone, good morning. Hope you guys are doing well. Today is Tuesday, December the 9th. We do have some red folder news coming into today. Tomorrow, of course, is FOMC, which is going to be the key news driver here in the markets. As for yesterday, we end up having a little bit of a dip here in the market. The question is if we want to come and buy the dip pre-FOMC for a potential move back up and towards your last week's highs and potentially our all-time highs here. So we'll hop onto the charts in a second. What's up, everyone? Good morning. Hope you guys are doing well. What's up? What's up? Good morning, B Roots, Andreas, Cody, Victor, Ryan. Good morning, everyone. Jeff. Good morning, Hartik. Dragon, Sinna. What's up, 50? Vate. Good morning, Martin, Robert, Eileen. Good morning, KO, Chris, Miss Reggie, Todd. Yeah, what's up, everyone? Hope you guys are doing well. Let's hop right into the charts before we do that. Let's go into the Forex Factory. Let me pull this up here, and then we'll head on to the charts in a second. Let me actually adjust this here as well. Okay, so yeah, coming into today here for the red folder news events, we'll see if we end up getting that ADP non-farm enrollment, but we do have some red folder news that's going to be the JOLTS opening here at 10 a.m. Eastern Standard Time. As for some more red folder news, as you can see here, tomorrow is going to be key. You have some unemployment costs that's right in the morning, and then of course later into the day at 2 p.m. Eastern Standard Time, we do have FOMC. And then we have the press conference, which is later into the session at 2:30. That's when Jerome Powell speaks. So this is what we have as for the red folder news events. And then on Thursday, we have unemployment claims. So this is really now what the market's waiting for, is that FOMC statement that's going to come into effect tomorrow. As for the levels that we have drawn out coming into today. So yesterday, I just went in and I redid all the levels that I had on basically majority of the names that we trade. So let's head on to the major indices. Okay, so first things first here, we're on the ES. We're on the 1 hour time frame. And as you can see yesterday, really we had a little bit of divergence. So overall, QQQ pushed up and towards our previous day highs. For the ES, we're a little bit less bullish on this name, just kind of in between its previous day's range. And then once we got underneath its previous day lows, we had a little bit more of a push towards the downside, just right back down in towards our key level of support. So you can see just a lot of consolidation here in the past week and a half. And now coming into today, really what I like to see is if this first dip is going to get bought up for a potential pushback up and towards your all-time highs. So we do have FOMC coming up on Wednesday. What I would like to see now here with this nice push higher, with this consolidation, I really want to see if now this is going to be that higher low for that push back up and towards our all-time highs. So coming into today here for the ES, let's keep an eye out on key levels. In this case, what we have now is just going to be our Thursday's lows of last week, which you can see price is essentially defending this level. Buyers stepped in off this level yesterday. And now what we have is just going to be our Friday's lows of last week here as well. So these are the two key levels that I have marked out. If I do want to see some upside, I like to see a break above your Friday's highs for this push towards the upside. Or if price came all the way back down in towards our previous day lows, that is also a potential play as well for a low risk opportunity back towards the upside. These are the two scenarios that I have played out to the long side for the ES. As I mentioned, my thesis coming into really the rest of the week is, right, we had a push down yesterday. Now I'd like to see really price could be bought up for a push back towards the upside pre-FOMC, and then we can see a potential move back higher with FOMC here as well. So that's what I'm going to be looking for coming into today. The only way I'm interested in some downside here on the overall markets is now honestly going to be underneath your previous day lows, along with your Thursday's lows of last week. So you can see touch here, touch here. I'm going to be more downside or short side focused underneath its previous day lows, because we do have some more room towards the downside if we can get underneath that previous day lows, which in this case is going to be our 6840. So this is going to be the game plan coming into today. I'm still going to maintain a bullish bias here in the overall markets, at least on the higher time frames wise. And I will flip bearish intraday if we can get underneath your previous day lows. So this is what we have for ES coming into today. This is what we have here for the SPY chart. Also, another thing to mention as well is I actually did end up posting the live stream that we hosted a few weeks ago on my second channel. I'm not sure if I have it linked in the description, but if you go into my YouTube channel and scroll all the way to the bottom, you'll find my second channel, and you can find that I did post the live stream. So if you guys do want to rewatch that, I think it's like an hour and a half on how I draw my key levels. You guys can do so, and that is on my second channel. Okay, so for the SPY chart, key levels that we have marked out, similar thesis here is just going to be it's going to be your Friday's lows of last week. We also have your Thursday be your dip, basically off your previous day lows for a push back towards the highs. So really two long scenarios here for the overall markets coming into today. As I mentioned, I'm going to be a little bit more short side bias if we get underneath your previous day lows. Of course, we could be looking for the pop and fade as well off of your 685. But I'm going to be leaning a little bit more towards the downside underneath your previous day lows, 681.50. So these are the levels that I have marked out for the SPY along with the ES coming into today. I'm still bullish here on the higher time frames. We've been just consolidating for the past, I'd say, week and a half here on the major indices. Really now what we're waiting for, as I mentioned, is going to be FOMC on Wednesday. So we'll see if this ends up turning into kind of that dip pre-FOMC, and then we end up having that move pre-FOMC, and then along with FOMC back up and towards our previous day highs, back up and towards our last week's highs and potentially our all-time highs. So that's my thesis coming into really today plus tomorrow. Moving forward, at least on, let's say we go onto the ES once again, onto the hourly chart, right, I'm going to maintain a bullish stance as long as you can hold this key level. As long as you can maintain really your last week's lows along with this key level support, I'm going to maintain a bullish stance. If we break underneath your previous day lows or potentially break underneath our last week's key levels, then I'm going to lean a little bit more bearish. And of course, if we break this key level support, which is now your 6,800, then I'm going to lean a little bit more towards the downside. But as long as you can maintain above at least your 6,800 moving forward, I'm going to be expecting this dip to be bought up for continuation. I'd personally like to see this level hold just because it'll build the higher lows. But of course, it could always come back down in towards that 6,800 and still maintain a bullish stance. But as I mentioned, key level going to be your 6,840 at a minimum, at least coming into today. Okay, let's go on to the NQ chart. Where's the tutorial again? It's if you go into my YouTube channel and you go into the homepage and you scroll all the way to the bottom, you'll see that I have my other channel linked on my YouTube channel. And you can click on it. It's my second channel, and you can go and watch the video I posted on my second channel. Okay, let's go on to the QQQ chart. Let's go into the hourly time frame. So similar thesis here. So yesterday, really higher lows being built. Key levels that we came into the market with is our previous day highs. You can see just kind of a big rejection right off the bat. Right, nice kind of drive up in towards our previous day highs. A little bit of rejection right off your previous day highs, and then end up filling this gap back towards the lows. And we actually came all the way back down in towards our previous day lows. So we just went from your previous day highs back down towards your previous day lows. A lot of range here in the overall indices. So now coming into today, key levels that we're going to have marked out, previous day lows. And we're also going to mark out our Thursday's highs of last week. So coming into today, we have two kind of theses that we're looking for. Potential bounce off your previous day lows for a pushback towards the upside. Or now a similar thing, break back above your Thursday's highs, reclaim for this pushback towards the upside. So that's what we have for the ES, for the NQ, exact same thing as the ES. I'm going to lean a little bit more towards the downside if you can get underneath that Monday's lows. If you can get underneath that Monday's lows, you can see previous support level potentially turning to resistance underneath your 25,580. So this is what we have for the NQ coming into today. As for the QQQ chart, similar thesis here. Key levels that we have coming into today is going to be our Monday's lows, and then we have our Thursday's highs of last week. What we like to see is the bounce off of your previous day lows for a pushback towards the upside. Or now reclaim back above your Thursday's highs, 625 for a pushback towards the upside. If you do want to see some downside here in the overall markets, I would like it honestly underneath your previous day lows, along with your key pivot level here from Friday. So these are the two scenarios that we have for the long side. As I mentioned, short side underneath your previous day lows. Another key level is just going to be your 625 here as well. So we could be looking for the kind of this pop and fade, but as I mentioned, if we show some buyers stepping in, I'd much rather look for this reclaim back above your 625 for a pushback towards the upside, just because still on the higher time frame we are leaning towards the upside, just because we are maintaining above key levels. So this is what we have on the QQQ coming into today. So that's it for the major indices. We have our key levels marked out. Now I'm going to go on to some tech names that I have coming into today. If you guys do have any charts or any tickers, now you guys can drop them in the chat and I'll go over them. If you guys are enjoying this so far, I appreciate if you guys drop a like. If you guys haven't joined the daily watch list, that of course is in the description below as well. Okay. All right, I'm going to go on to some of the Mag 7 names here. But yeah, if you guys do have any charts or any tickers, you guys can now drop them in the chat. What's up, everyone? Good morning. Are these colors? Yeah, I just draw them myself. So just basically just custom colors, or just default green, red. And then I have kind of this yellow zone here as well. And I also have them labeled so you guys can see them nice and easy. The key levels tutorial was really awesome. Thanks, Jack. Appreciate that. Let's see. Colors drawn. Good morning. Okay, let's go on to the Mag 7 first, and then I'll go into some other names here in a second. Okay, so first things first, for Tesla. So key levels that we have marked out yesterday was our Wednesday's lows of last week. You can see previous level of resistance turned into support. We had a little bit of a gap down yesterday, so that was showing, it was showing relative weakness coming into market open with this gap down. You can see once we gap down, ended up getting underneath, retest, and then continuation towards the downside. So Wednesday's highs was a very key level for Tesla. Now coming into today, as you can see, Tesla is still staying somewhat heavy. The key levels that we have marked out is really the area that we broke down from, our 432. You can see touch here, right? Try breaking above. Once we ended up breaking above, nice retest once again above our 432. So this is our key level here on the higher time frames. It's kind of this general area marked out here as well. So for Tesla, if you do want to see any sort of potential bounce play here, key levels that we have marked out is just going to be our previous day lows along with our 433. So we're going to either need that bounce right off our previous day lows right off the bat, or if it gets underneath, we could be looking for the bounce play off your 433. I'm not as interested in Tesla bounce, at least right off the bat, just because this one, a little bit of relative weakness yesterday, kind of driving price towards the downside. QQQ was down as well, but of course, Tesla did have relative weakness. So the key levels coming into today that I'm going to have marked out, previous day close. You also have your previous day lows along with your 433. If you're interested in Tesla downside, potential pop and fade off your previous day close for a push lower, or an opening drive play right off the bat for a push down in towards that 433 here. You do have about around 3 to 4 points. So if you are interested right off the bat, you could be looking for, as I mentioned, pop and fade or opening drive down in towards that 433 key level. So this is what we have for Tesla coming into today. Just looking for continuation towards the downside based off of yesterday's price action. So these are the levels we're going to have marked out coming into today. As for Nvidia, so we did have some news in the after hours here, kind of pushing price towards the upside. Now you can see we're kind of right back down in towards your previous day close. So for Nvidia coming into today, so the key levels that we have marked out is going to be this 185. You can see touch here, multiple touches yesterday as well. What I'd really like to see now on Nvidia is maintain above this 185 for this pushback up and towards your upside, which will be 190 and potentially your earnings high, all the way back up and towards your 198. What I like to see here, at least coming to today, is your reaction that we have off of your 185.50, along with their previous day highs 188. So for some upside coming to today, we have really two scenarios. Number one, reclaim back above your previous day highs for continuation. Another possible scenario, dip back down in towards your previous day close for this pushback towards the upside here as well. So really two scenarios for the long side on Nvidia, right? Either the reclaim back above your previous day highs right off the bat, or your previous day close, bounce, and you're going to be looking for the reclaim back above your previous day highs later into the session. So these are the two scenarios that we have laid out for Nvidia, at least towards the upside. It very much well could, right, reject potential kind of pop and fade off that previous day highs, or if price gets underneath that 185.50, then you're going to be leaning a little bit more towards the downside. But based off of kind of the news, we're dropping now here in the pre-market, but key level, as I mentioned, it's going to be above your 188. That's going to be key. If you can get above your previous day highs and hold, that's going to be key for continuation towards upside. All right, that's what we have for Nvidia coming into today. Let's go on to AMD. All right, so for AMD, similar thesis as Nvidia, we have a lot of consolidation here, and now we're trying to essentially have this reversal back towards the upside. Key levels that we do have marked out is your last week's highs that we're going to have to break above. And then we also have your previous day highs marked out as well. So for AMD, you can see yesterday, nice kind of pop in the after hours as well with Nvidia. But now in the pre-market, we're just right back down in towards really this previous day close general level. So as you can see right here, the key levels that we have marked out is just going to be our 223, along with our last week's highs being that 226. As for the levels today, right, 220.50 along with that 223 previous day highs, similar thesis, reclaim back above your 223.50 previous day highs is in play, or the potential bounce play off of our really now 221 for this pushback towards the upside. So these are the two long scenarios that we do have marked out. If we break underneath your 220.50, I'm going to lean a little bit more towards the downside here on some of the semiconductors. What we do have to mention as well is that there is a little bit of a divergence in AMD and Nvidia specifically. You can see the SMH is essentially at your all-time highs, right? So this is really what's been leading the market back towards the upside in the past 2 weeks is the semis. You can see nice bounce back up and towards your all-time highs. SPY and Qs, nice bounce here as well. But of course, SMH is the leader pushing back towards the upside, whereas Nvidia and AMD are kind of lagging behind. Right, you can see overall markets bouncing, right? Nvidia bouncing slightly here, whereas the SMH back up and towards our all-time high. So specifically Nvidia, along with AMD, have been showing a little bit more relative weakness compared to the overall semiconductor ETF. Let's go on to Apple. So Apple coming to today, key levels that we have marked out, just essentially this consolidation before we end up having this nice break up and towards our all-time highs. Key levels that we have marked out is now just going to be our previous day highs along with our previous day lows. As for Apple, still higher time frames is being maintained. What I would like to see now is just a reclaim back above your previous day highs, 279.50 for this continued pushback towards the upside. So this is the number one scenario for Apple. Another possible scenario here, as well as your previous day close hold for this pushback towards the upside here as well. So two scenarios laid out for Apple towards the upside, previous day close or above your previous day highs. Potential pop and fade, of course, still is in play. We very much well could come up and towards that 279, reject and come all the way back towards the downside. As for Google, key levels that we have marked out is going to be now this 314. So this is the general level where you can see we have a touch here, right? Using it as support yesterday, really breaking underneath this key level support here for Google, which is your 314.50, your last week's lows. So for Google, this one dropping towards the downside here. Of course, these ones have been inversely correlated compared to the semiconductor. So if Nvidia goes up, Google has been heading lower, and if Google heads higher, right, Nvidia has been heading lower. So a little bit of a divergence between a couple of these names here. As for Google coming into today, key level is going to be that 314. If we reject off this level, we can see this continue push back down in towards your previous day lows and below. If we can reclaim back above that 314, we can see this push back towards your 316 and above. So this is what we have for Google coming into today. Keep this in mind, right? 314 is going to be key. As I mentioned, right? Touch here, touch here. So this is going to be the key level we have to reclaim if we want to see any sort of pushback towards the upside. As for Meta, we had news last week. Key level that we can just have marked out are 676 along with their 660. Just a lot of consolidation in between here. What we like to see is the bounce for this continuation higher, or the break above our 676 for continuation. As for some shorts, underneath your Friday's lows of last week for continuation towards the downside, or now, of course, it would be kind of this pop and fade off your 676. So this is what we have for Meta coming to today. Other levels we can have marked out can be your previous day close here as well, 666. As for Amazon, really not too much to talk about on this ticker. Key level is now just going to be your last week's lows, which is this 227 yesterday. Nice kind of drive up and towards our Friday's highs. Kind of just rejection off this key pivot point, push towards the downside. Now today, key level is going to be your 227. So if we reject, we can see some more downside. Underneath that last week's lows, if we can reclaim, we're going to see this mean reversion back in between its previous day's range. As for Microsoft, so this has really been the only ticker that held up with the overall markets dropping yesterday. So Microsoft showed some relative strength here, kind of reclaimed back above key levels as well. Now you can see we're just right at a key level of resistance, right? Multiple touches off this 492. What we like to see now above your previous day highs for this continuation higher. So this is a very key level here for Microsoft. Your 492 break above, retest above that 492 for continuation. If we come up, reject, we're going to see this push right back towards the downside. And then for Netflix, this one has been continuing to show relative weakness. Key levels that we can have marked out now is just going to be our previous day highs. Sorry, it's going to be your Friday's lows of last week. And then we also have this key level, which is your Wednesday's lows of last week, your 103. So if you want to maintain downside, really reject underneath your 98 for continuation lower. That's going to be key for some more downside here on Netflix. Okay. All right, so that was primarily all the Mag 7s that we went over here. I'll kind of go over my top watches coming into today. If you guys do have any charts or any tickers now, you guys can now drop them in the chat. And I'll go over some for the next kind of 5 to 10 minutes here. If you guys are enjoying this so far, I appreciate if you guys drop a like. If you guys haven't joined the daily watch list, that of course is in the description below here as well. Price drops below key level, then comes back and reclaims. Do you have to have that break and retest, or you could enter in with strong price action? A reclaim is different than a break and retest. You don't have to wait for the retest, because normally if you have a strong reclaim and it's a really solid reclaim, majority of the times it doesn't come back for the retest. Right? That's what's called the 84% rule. email. That one's in the description. I have my email listed in the description below. How come the candles during your pre-market lives are currently black, but when you're actually trading the candle, they're the same thing. I just have a different layout. You're probably talking about this layout, and they're just different layouts. Okay, let me go on to some of the major indices for IWM. So IWM has been fairly bullish. This has actually been one of the main indices that have been leading the markets back higher. Really, you can see super strong bounce. This was after we had that nice day towards the downside, and then immediate buyers stepped in here on the IWM, and now we're already back up and towards our all-time highs. So there's not too many indices that are back at all-time highs here, but IWM specifically already back at this 252. So really strong buyers kind of stepped in. Now the key levels that we have marked out is just our all-time highs marked out. So you can see touch here. This was yesterday, another touch last week, and another touch as well. This is our all-time highs. We're now just kind of basing above your all-time highs. If you do want to see continuation here, key levels that we have marked out is your Friday's lows, which is our 250.50, potential kind of bounce play for a push higher. Or now it's really going to be above your all-time highs, which is your 250.250 for this continued push back up and towards your all-time highs and above. So really two scenarios for the IWM, at least moving forward. Based off of the daily chart, we can see a little bit of a pullback. But now, as long as we maintain above key levels, you just like to see potentially, right, either this cup and handle form and continuation back up and towards our all-time highs and above. So this is what we have for the IWM specifically coming into today. Let's go into Palantir. So Palantir, solid bounce back towards the upside here as well. At this kind of daily gap from all the way back. This was from November the 13th. As for Palantir yesterday, nice kind of drive towards the upside. Now the key levels that we're going to have marked out, it's going to be this 183.50. And then other levels that we have marked out as well. Sorry, it's going to be your Thursday's highs of last week, which also coincides with basically your Friday's lows as well. So coming into today here for Palantir, really it's just going to be this 183.50 along with this 179. As long as you maintain above your 179 here, it's your higher time frame key level. I'm going to maintain a bullish stance on Palantir. That's going to be key. Another potential kind of opportunity, or these are really my main key levels. Maybe your previous day lows, potential reclaim back above this key level here as well. I'm only interested in some downside underneath your 178.50 here on the higher time frames. So that's what we have for Palantir. As for Hood, this one key level that we have marked out last week's highs. Nice push towards the upside yesterday. A little bit of rejection off this 137. At least for today, potential bounce off this 134, or now it's going to be above your 137.50 for some downside now, underneath that 134 for continuation lower. So these are the key levels that we have for Hood coming into today. As for SoFi, a lot of consolidation. We had some bearish news, dropped this towards the downside with its public offering. Key levels that we have marked out, you can see staying heavy here now. SoFi, you really like to see the break underneath your 27 for continuation lower, a potential pop and fade. If you maintain a bullish stance, it's going to have to be the reclaim back above this 27.80 for any sort of continued pushback towards upside. So that's what we have for SoFi coming into today. As for AVGO, this was one of our main watches yesterday. This one really solid push towards the upside. This is right back at your all-time highs key level. We do have earnings on AVGO and Oracle later into the week, so not as interested anymore. But the key levels, at least moving forward, is going to be our all-time highs, 404. Nice push towards the upside. Now what we like to see really on AVGO is to maintain above really your Friday's highs of last week. If it comes back down, this is still fairly bullish in my opinion, as long as you can maintain above that really 392 last week's highs, or sorry, your Friday's highs for this continuation higher. So key levels for Oracle, AVGO that you can have marked out. Previous day lows, previous day highs, and then your Friday's highs of last week. So you either want to see a bounce off previous day lows, or if price gets underneath, to bounce off your Friday's highs for this continued pushback towards upside. As for Oracle, this one here as well, kind of pushing higher pre-earnings that we have later into the week. I don't expect it to do that much with earnings now later into the session, plus FOMC tomorrow as well. But the key levels for Oracle is just now going to be this Friday's highs. If you want to maintain a bullish stance above your Friday's highs, or preferably above your previous day highs for continuation. I'm not interested. I'll be careful on downside on a couple of these tickers, but downside really now going to be underneath your previous day lows and also underneath this Friday's highs. So this is what we have for Oracle. And then for the rest of the tickers, yeah, I think that's majority of the tickers here. So as for the rest of the tickers, like some of these semiconductors, right, MU, key levels that we have marked out, right, 242 previous day highs and previous day lows. TSM, this one, fairly close to our all-time highs as well. A lot of these semis are actually pulling back in the pre-market after having this nice kind of rally in the after hours. So we're just going to be a little bit more cautious as for the main watches coming into today. We do have to keep in mind we have some red folder news at 10 a.m. as well, which is the JOLTS opening. But yeah, thesis coming into this morning. So as I mentioned, we end up dropping, just kind of rejecting off of your previous day highs yesterday, and then just came all the way back down in towards that previous day lows. My game plan today here for the major indices is now going to be looking for the potential bounce play off of your Monday's lows, or the reclaim back above your Thursday's highs for continuation towards the upside. If let's say we drop right off the bat, if we drop underneath your previous day lows within the first 5 minutes, then I'd be interested in some more downside underneath your Monday's lows of last week for this continuation lower. I'm still maintaining a bullish bias here in the overall markets, and I would like to see this dip because the main thing here, anything that happens today is not going to be as important and what happens tomorrow. Similar as the morning session tomorrow, we do have FOMC, so that's the main news driver. If you trade, either you're looking for scalps, I'll be sizing down on scalps just because we do have FOMC tomorrow. That's going to be at 2 p.m. Eastern Standard Time. If you're going to potentially position yourself for a longer term trade coming into FOMC, you have to keep that in mind as well with the volatility that's going to be injected into the market. So you're either going to trade or have very small scalps pre-FOMC, or you're now going to be positioning yourself for that FOMC trade later into the day tomorrow and longer term. So those are the two scenarios, at least really coming into the markets. For SPY, similar thesis here, key levels that we're just going to have marked out Friday's lows. Also have your previous day lows, potential bounce off the key levels. Let's say if price drops underneath, similar thesis. If let's say price drops right off the bat within the first 5 minutes underneath that previous day lows, then we're going to either be looking for the retest underneath your previous day lows for continuation. That's really going to be the key scenario. Or if price had a really strong really strong dip and then reclaim, we could be looking for the reclaim back above your previous day lows. So really today, previous day lows is going to be key here on both the SPY and the Qs. And we can also mark out that 625. As for my main watches, keep an eye out on Tesla right off the bat. If the market does want to head lower, Tesla's going to be the main thing to look out for a potential kind of pop and fade or an opening drive play, just based off the relative weakness yesterday down in towards that 433. As for Nvidia and AMD, both these ones I do like for some upside, only if we can reclaim back above your previous day highs, 188. AMD is now going to be this 223. Apple, key level is your 279.50. Keep an eye out on that. Google, potential weakness here. So Google, I'm interested in some more downside along with Tesla showing some relative weakness here. So for Google, keep an eye out on this 314.50 for some more downside. And then for Meta, we can also keep an eye out on this 662. So really today, for the overall markets, we're just going to keep an eye out on your previous day lows. As I mentioned, Tesla and Google potential pop and fades coming to market open. for some weakness. And of course, if Nvidia and AMD, let's say if the market does want to bounce off your previous day lows, then I'm going to keep an eye out on Nvidia and AMD for the reclaim back above your previous day highs. As for a few other names, right, potential kind of bounce here on Palantir, Hood, key level previous day highs in this Wednesday's highs as well, 143. And then we'll keep an eye out on Palantir and, of course, Oracle as well with earnings later into the week. But at least my game plan, either I'm looking for just kind of day trades off of your previous day lows, which is going to be key on the major indices and everything else, or I'm going to be looking to buy potential major dips for potential FOMC trade, or at least pre FOMC trade, and then looking to trade it into FOMC. So my plan is fairly clear, at least coming into today. Those are the levels that I have marked out. We'll see if the market does want to get bought up pre-FOMC and, of course, into tomorrow as well. But the main day is going to be tomorrow, as I mentioned. That is going to be at 2 p.m. Eastern Standard Time. And then, of course, we do have Jerome Powell speaking. That is at 2:30 p.m. Eastern Standard Time. But yeah, that is going to be it for me today. Hopefully, you guys did enjoy that. If you did, appreciate if you guys drop a like and sub. If you guys haven't joined the daily watch list, that of course is in the description below. Do you ever post your Sunday session on how you draw your? Yeah, as I mentioned, I posted it on my second channel. You guys can go on to my main channel, scroll all the way to the bottom. That's gonna have a link to that second channel, and then you can watch that video. All right, that's gonna be it for me today, and I will see you guys all tomorrow. All right, take care, everyone. Have a great rest of the day. Peace.